Welcome to Loup TV. I'm your host, Gene Munster, joined by Loup's founding partners, Andrew Murphy, Doug Clinton. Had to bring in the trio because, of course, this has been a huge week for large cap tech earnings and has been quite mysterious in terms of the results versus how these companies, the stocks have performed after reporting the results. And I want to jump right in, go to you, Andrew, a one-liner as you kind of think about, meditate, marinate on what happened this week. What pops top of mind for you?
What struck me was the fact that this pandemic tailwind that many of the high growth tech names realized during the pandemic has flipped to a headwind now, facing tougher comps.
Makes sense. A lot of good things happen, creates goodness, creates tough comps, as we all know. Doug, what was your takeaway?
I would say if you look at just the last few months and how some of these stocks have acted, particularly the ad focused names, Google and Facebook, they are two of the top five biggest companies in the world, and their stocks are up 35 and 40% in 6 months. It's just been an incredible move for them. So the word for me is I think a lot of this was priced in. They had stellar performance. I mean, looking at all of these companies, when you talk about companies with tens of billions of dollars revenue base growing, in some cases 35, 50+%, that's incredible. I don't know if we've ever seen this in history. So it is in a way historic, but it's also a little bit anomalous the way the stocks have moved. And I think the pricing action over the past 6 months explains it for at least the ad names.
And the market ultimately did get it right when they started to see a surge in these big tech companies a year plus ago. And we're seeing that come to fruition here. Like you said, Doug, it's historical what's happened, which is probably why there's a new phrase that has been interjected into some of these earnings calls, at least with Facebook and Amazon, which is the 2-year stack. Looking at the 2-year stack to try to determine some sort of growth rate. And the basic idea is what both those companies were suggesting is to look at their growth rate when they're exiting 2019 before everything hit, and to think about that as kind of a baseline growth rate of the business. And in doing so, you saw analysts' expectations for Facebook in the September quarter go from 31% growth down to 25%. That's essentially what they're growing at entering the pandemic. And Amazon, a similar kind of 20-ish percent, an 8% step down for September from where people were at. So the topic again is regarding the 2-year stack, using the back half of 2019 as some sort of a run rate to think about what the true trajectory of these businesses. Andrew, do you buy the 2-year stack methodology to modeling?
I get what they're going for, trying to understand sort of a pre-pandemic or ex-pandemic metric. But the world has changed so dramatically, and our habits and practices have changed so dramatically. I think that there is a real opportunity to reset expectations for growth on these companies once we get those odd comps behind us.
Okay, and do you think that once we get the odd comps behind us, is it fair to think about their ready kind of a steady growth rate, or at least a starting point, as a pre-pandemic number?
I think the pre-pandemic number is a good baseline, but I think because our habits and practices have changed so much, we may see more variance than we did before the pandemic against those baselines.
Got it. Good guideline, but not, you can't take it as truth. Doug, your take on using the going back to back half of 19 as a starting point?
I think it's the right anchor. And I think to Andrew's point around variance, to me, Amazon probably is the one, if you look at the big companies, that will have the most variance. I think we're talking about how shopping habits have changed so much in the last year. And now we're going back to sort of normal. We're open. Are people going to go back to retail the same way? I'm not sure. I think the verdict is still out there. So Amazon to me is the most variance. I think Google and Facebook, they are stable businesses that seem to work in any environment. As long as the economy is good, advertisers want to reach customers. And so I think for them, it makes the most sense of probably the group.
And I would add that if you kind of look at which companies got a benefit, when they got a benefit, Amazon's business was the first to take off and kind of the first to seeing some of these more potent reiteration to normal growth rates. And then Apple has had great news, but the stock has not performed in response to that good news. I think that was kind of the second company to have a benefit. And then, as Doug, you mentioned, the ad companies played in. Facebook had some commentary around it. They also flavored in a little bit of an impact from Apple and some of their ad tracking. But Google still has to remain. They really haven't had that hard conversation, at least that commentary about kind of this return or what the normal growth rate is. And I'm curious, Doug, do you feel that that one is to come for Google? Are they going to have a kind of a little bit more difficult of a September report based on kind of this wave and coming to terms with what the underlying growth rate is?
I mean, I think they still have a relatively easy Q3 comp. Again, just thinking about the ad industry, I don't think the ad industry really came back to the market. The conversation, advertising is really about what the public conversation is, and when the public conversation is dominated by something like a pandemic, advertising is affected by that. We certainly saw it in the Q2 comp. I think you're still going to see some ease in the Q3 comp, although that's built into expectations right now. So I don't think on an absolute basis you're going to see some massive return to the 2019 levels in Q3. But as we think about 2022, I think that mid-high teens growth year over year for Google is probably a good baseline to think about where they look going forward.
Makes sense. I want to shift gears, kind of take us out of the big picture, the 2-year stack conversation, and what's the normal growth, all that topic, and ask specifics like regarding companies. Did anything just jump out where you thought that really stuck out, a data point from any of the companies during the earnings report? Andrew?
Yeah, I've got one from Apple. They came into the pandemic, revenue growth was flat-ish. This June quarter, they grew revenue, $80 billion in revenue, growing 36% year over year. That struck me because the law of large numbers just doesn't seem to apply to Apple. We keep hearing that. And this time it's the fact that they're so well positioned for the fact that we are at home more, using devices more, at this digital transformation, and the way that they've positioned the services business to benefit from their user base and the usership of their products.
Doug?
I'd have to pick the one that became sort of a meme, which was the metaverse that Mark Zuckerberg talked on Facebook's call at length about. It reminded me of the legendary Steve Ballmer video of him doing developers. I felt like Zuck was saying metaverse. And I think, metaverse, even Microsoft, ironically, Satya Nadella mentioned an enterprise metaverse. So I think about technology themes, I don't think there is one theme that is more top of mind across the big tech companies, probably at least talking about it. Maybe not necessarily by investing dollars, but talking about the metaverse is huge. I think there are downstream impacts to, people getting on board with this concept. I think it's probably good for companies like Unity. I think over the long term, it's good for many of the gaming companies that are in some ways early metaverses. And we'll see how that plays out over the long term. It's not something I think you're going to see in anybody's numbers over the next year. But I do think that the metaverse and the concept of the metaverse is a massive long-term opportunity for Facebook and really all these companies.
Agree that tech companies are talking about it. Agree with the disconnect. Also agree that Unity is exceptionally well positioned, which, by the way, is a personal holding for Andrew, Doug, and I. From my perspective, what caught my attention was just the scale of what Amazon has done over the past years. Just take away from reported numbers and what the stock's doing and start thinking about, they have 1.2 million people. They added 62,000 last quarter. They were adding more than 100,000 for a couple, 3 quarters in a row there. Basically the world shut down. Everybody flooded to Amazon, and I think they've just done a remarkable job. Give them credit just to keep up to speed. If you feel like you're getting your Amazon deliveries a little bit slower than you used to a couple years ago, you are right. The company confirmed that they still haven't met the delivery pace that they had at the end of 2019. Who knows what these numbers ultimately shake out at? Who knows when the supply, the chip shortage ends? I do believe that in the next year, Amazon will quicken its delivery. We'll get back to those 2019 one-day delivery speeds. On behalf of what has been a most entertaining and fruitful earnings season for big tech, Andrew, Doug, and myself and Loop TV, bye for now.